Now, for the battered Japanese yen, there is some respite expected as we head into 2024. Asset managers have turned bullish on the yen as the US Federal Reserve and the Bank of Japan are likely to reserve monetary policy path soon. The expectations for the monetary policy gap between Japan and the United States to narrow has boosted yen's predictions for next year. For the first time since May, asset managers changed their sentiment towards the yen from pessimistic to positive. Hedge funds' somewhat less pessimistic bets on the yen were also evident in the latest data from the Commodities Future Trading Commission. Morgan Stanley now expects record Japan revenue next year as the central bank fuels trading. The Fed signaled a shift to rate cuts next year. At the same time, there are lingering expectations that the BOJ is getting ready to discontinue its decades-long negative interest rate regime. This month, the yen rose versus the dollar to its highest level since the end of July. As inflation pressures have eased, the Bank of England and the European Central Bank are expected to lower interest rates next year. The dollar-yen risk reversals also imply that traders are hedging for a strengthening of the Japanese yen. Morgan Stanley joins Barclays in pointing to a trading boom in the world's third biggest economy. The recovery in bets in favor of Japan, it distinguishes the market from much of the rest of the globe. A significant portion of the Wall Street anticipates modest trader bonuses following a decline in income this year. Morgan Stanley is partnering with Mitsubishi UFJ Financial Group to push forward their decades-long ties to focus on securities in Tokyo. This is aimed at jointly surpassing Nomura, the largest lender in Japan.